In this Money Talk video, I'm going to discuss money market accounts, or MMAs, and we're starting right now. Hey guys, welcome to another video from the Keystone Financial Academy. My name is Elliot, and if you're new to this channel, I invite you to join our community by subscribing and turning on notifications so you don't miss any of the upcoming videos. A money market account, or an MMA, is a significant type of consumer bank account that is somewhat similar to a regular bank or credit union savings account, but with some key differences, with the most obvious difference being the higher interest rate offered, with the average rate currently hovering at around 0.5% APY. So if you need to open up a savings account, I would recommend instead to open up a money market account. While the interest rate is still not all that much, it's still significantly higher than what a regular savings account would offer. These regular savings accounts are only averaging 0.05% APY, so why not get a lot more for your money? I'll go over the pros and cons of an MMA in just a moment, as well as list some of the better accounts out there. But first, here's a little bit of insight into why money market account rates are higher than a regular savings account. And it all has to do with what the bank does with your money. When you deposit cash into your neighborhood bank savings account, the money doesn't just sit around there waiting for you to take it out again. It's immediately put to work earning interest for your bank as it lends that money out to other consumers. Fundamentally, this, along with those pesky bank fees, is how the bank's retail division covers cost and turns a profit. The loans made with your savings deposit are for basic consumer products such as car loans and do not generally carry a high interest rate. Therefore, the bank won't pay much interest back to you for the use of your money. With a money market account, the money you deposit is invested, not loaned out, and earns a superior return. The investments pursued by the bank can include various government securities such as bonds, commercial paper, and other short and medium-term quality investments. That alone, however, won't net you the higher interest rate. In addition, MMAs sometimes have higher deposit requirements, from $500 to $1,000 as a minimum, ranging all the way up to $10,000 in some cases. This ensures that banks have a larger chunk of money to invest with and yielding higher returns. Finally, to get those rates a bit higher still, MMAs feature aggressive cost cutting in the account by limiting the amount of pricey activity you can do on it. With an MMA, you're typically limited in how many times you can withdraw or transfer funds or write checks against the funds. To save even more money, many MMA banks are entirely virtual these days and have no brick and mortar locations aside from a few customer service outlets. Not surprisingly, these virtual only locations offer a higher interest rate, but in the end it's really all of the reasons I just covered that contribute to money market interest rates being what they are. To you, the customer, though, a money market account doesn't appear a whole lot different from a regular bank savings account. Significantly, MMAs are protected by the FDIC up to $250,000, just like regular bank accounts. They can do that as the investments sought by the banks are of sufficient quality to minimize loss and qualify for FDIC protection. Nearly every retail bank and credit union offers an MMA, and in today's age there's actually more virtual online-only banks. These online institutions are the same as brick and mortar banks, and some have grown to be extremely large. And since they're subjected to the same FDIC protection, there's really little reason to be skeptical of them. So now let's talk about why and when you'd want to open a money market account. One common reason would be to park a large amount of money from, say, an inheritance, an insurance settlement, or a year-end bonus, or to hold some cash briefly for a house down payment or a college tuition payment. A money market account can also function as a long-term emergency savings, which is exactly how I use it. In all cases, you're at least somewhat protecting the money from inflation, which was running at 0.62% in 2020. And of course, you're keeping the money safe in an account, not under your mattress. Now, you can certainly invest some of the cash in stocks, but there's always a chance you could lose some of the money, so this is not a good idea for emergency savings. And you can certainly place the money in a regular bank savings account, but the super low interest rate will not come close to the interest rate offered by the MMA. Only a money market account has what you'd call the best of both worlds. Now, when should you not use an MMA? The short answer is for long-term investing. Ultimately, an MMA is still a savings, not an investment account. Your earned interest in today's ultra-low interest rate environment is really just there to barely cover inflation, not much more than that. so it would not be appropriate to use a money market account for any kind of investing. It's really just for emergency savings or to briefly store large sums of money. So now that you have all this background information on a money market account, who do you actually go to open one? Well, as I mentioned earlier, all major banks and credit unions like a Bank of America, Chase, Citibank, and others have money market accounts. But let's focus on the less known online banks as they offer a better interest rate. I'll list some of the bigger names to take a look at in this online money market world and include the rates they're currently offering, which is for February 2021. Here they are in alphabetical order. We have Ally Bank offering 0.5% APY, Barclays Bank offering 0.4% APY, Capital One 360 offering 0.4% APY, CIT Bank offering 0.5% APY, Discover Bank offering 0.35% APY, Sallie Mae offering 0.4% APY, and TIAA Bank offering 0.4 APY. I personally use Sallie Mae because they had the best rates when I first opened the account a number of years ago, but since then other online banks have posted somewhat better rates, so in your case shop around carefully. And while comparing, make sure the deposit minimums and the transaction limits are what you're looking for. Finally, keep an eye on fees and make sure they are low or non-existent, and be aware of what you need to do or not to do to avoid them completely. When you're ready to open an account, you can do it entirely online. And once open, you just link it to your current bank account, transfer the money, and that's pretty much it. Okay, that was a quick money talk on the basics of money market accounts. Thanks for watching, and if you liked this video and found it useful, please consider subscribing, and I will see you guys again soon.